A sense of capital. Aloha, ladies and gents. Guys, welcome back to a new episode of A Sense of Capital Insights Time. No, it's actually A Sense of Capital Life Earnings. Your host of today, as always, is Julian. I'm very glad to have all of you in. And today a very special call and already a very special guest is in here. I can see him in the chat. Lawn Mover Man, Cheese Kollega. Guys, you can see very likely there's a delay. I didn't have time to basically solve this issue, but it's, I guess, just a 5-second delay. Guys, please already in advance appreciate for your understanding. And you can see here, no, I wasn't robbed. I'm currently on a business trip and therefore sitting in a hotel. And yeah, actually, because today it's a crazy feast, it's a crazy day because we're talking about the Q4 and full year 2024 earnings results of the one and only HIMS and HERS out of the US, healthcare, digital pharmacy, doctor shop provider. Yeah, of course, Lone Mover Man. With you already, I would start and do this kind of stuff here. Honestly, man. I'm not sure where you're from and if you have a microphone, but maybe we need to team up in the future and have as well an earnings stream about one of. You can choose which kind of stock we want to back together. It can only get better, I think, you know. However, guys, I try to prepare myself as good as I can, and as always, please use the comment function, Lone Man, so greetings to Finland. Guys, use the comment section and interact with each other. And when we are on a more progressed level of this earnings live stream, I will as well react and reply to the different comments and screen them in detail. However, always at the beginning, a quick disclaimer that in the upcoming minutes that will not be financial advice, consultation whatsoever, and there is no guarantee for correctness of the provided data. Guys, so make always sure you do your own due diligence, research process, and at the end it's your own money, your own decision, and out of it resulting your own risk and chance ratio, basically. Guys, so what we will cover today, I mean, it's a classic one. It's a classic one for those of you. I mean, you know it HIMS, you know it HERS. Let's say, guys, I mean, that's kind of an anniversary stream. The first stream I did at this YouTube account was actually, or in general, the first activity was HIMS and HERS live stream. I'm not sure, roughly 2 years ago or something like this. You can check it out by yourself. Time is running. 1.5 or 2 years, not sure, guys. Check it out by yourself. But actually, it's kind of like a fairy tale how it developed, and that it gets that much attention is quite surprising for, I think, a lot of out there who backed it quite early and even way earlier than I, for instance, honestly, guys. Then even I had a lot of doubts, and at the beginning thought, man, that's too good to be true, until I've decided to purchase my initial portion of HIMS stocks. I mean, actually, I think the price almost doubled to something like, or tripled, not sure. I mean, first time I checked and screened it in detail with $3 or $4, and then finally invested in something like 8 or 10, I'm not sure. However, the result you can see when we check out my personal portfolio. I mean, that's already almost one month old. You can see it right here in the middle, in the center. But I'm currently holding 2,300 shares, so it's kind of a ride, and I still stick to it actually. So it's roughly 62% of my portfolio today. So I try to not start to cry, no matter if it's very positive or very negative. But look, guys, at the end, look, stay rational. I want to share just one information before I add some. Hi, Stingerus, peace. Thank you very much for having you in, Kollega. I really want to talk not too much about HIMS and HERS actually, guys. Again, I think it's the by far most popular stock I'm backing, since I'm backing companies live, and yes, I will address some words to it, but here I think for me most important is really this history of doubts, you know. I mean, of course it depends why you invested and when, yeah. I mean, when you are very comfortable in the plus, you know, in the green with multiple 100% or whatsoever, this kind of bumpers like the last Friday, for instance, when the FDA decided to very likely remove semaglutide, the ingredient for the GLP-1 weight loss, which getting utilized, compounded in a compounded way by HIMS and HERS, which they removed from the list. And so yeah, now times runs out. I think 60 or 90 days till HIMS and HERS is able to sell those products. I mean, this kind of bumpers existed a lot of times, and more important actually, guys, is this from my perspective, the history of doubts. If you are more mid or long term orientated in this investment, you can see it here. I mean, that's really the history, the legacy of this company. When I did brainstorming in advance of the stream, what we have, or what I have experienced, yeah. And actually as well, I was not always that confident and sure, and even now you never know what the future brings, but you need to work with the information you have, yeah. So you can see here, I mean, when I started roughly 2 years ago, that it was stated that the prescription process is dangerous, yeah. It's very innovative, very new, adds value actually to the clients, yeah, to the patients, but a lot of doubts in terms of the actual prescription process. You can't go to a digital doctor shop, you know, just dial in through screen and you get your prescription. Prescription is not required, but you get your prescription, for instance, yeah. So, and then actually afterwards, a lot of times there was just the saying, yeah, it's a one-hit wonder. HIMS is equal to a one-hit wonder. Erection dysfunctionality, so basically cheap Viagra, not more, not less. And later on, hair loss was added, and it was the same rumors, the same statements, the same judgment about this company. It's just this. Then there was the saying that there is no marketing flywheel effect, basically, yeah, no chance for profitability, basically, which results out of it. So basically, for $1 they investing in marketing, they achieve $1 revenue, or vice versa, yeah, basically. And so it's just buying revenue at the end. That was as well rumors and doubts, basically. And then afterwards, yeah, I mean, end of 2023, they released not their GLP-1 weight loss products, but based on the different personalized tablets, pills, basically. They released their first products, and then I think, what was it, May or June or something like this, the first time GLP-1 based on semaglutide weight loss products, and then everyone was just hunting this aspect, yeah, big focus on it, and at the same time there was doubts big on the co-founder and CEO of this company, Andrew Dudum, because of this situation in the Gaza Strip, Israelis, Palestinians. As in the past, I don't want to judge about this as well, but I know many out there on platforms like Reddit and Seeking Alpha told HIMS and HERS is done because of Andrew Dudum. He's not capable as a CEO, a person who's twittering that aggressively about what is going on in the colleges in the US and the demonstrations, this kind of stuff. Demonstration, not the word, you know, the blockades basically by the students, and that he is supporting it. That can't be the CEO there. And so story is done. Now we have since Friday the GLP-1 ban, which getting soon active, and let's see what the future brings. Maybe it is the demand is that high that they can't cover it. Maybe they get there are rumors that the quality level shrinks basically because of the mass production. Maybe there will be rumors that because they can't cover the demand, potential customers goes to other vendors of those services, like Roman, for instance, All of this existed, and next to it, we should not forget always other aspects and doubts considered, like the competition, for instance, from Amazon, you know it by yourself, pharmacy, digital pharmacy stuff, national bans potentially, that there is no moat. Where's the moat? Where's the moat for other companies, I ask, There's just really a very low amount, just a few companies which really have a true moat. Maybe, for instance, ASML from the Netherlands, with the lithography machines for the semiconductor processors production. Maybe they have a moat because of this unique IP, But guys, HIMS and HERS, and you can see here, and product quality was as well always an aspect. HIMS as well now with weight loss, for instance, HIMS and HERS was always very criticized by many out there, and honestly, the negative momentum turned into a very positive one in the past actually almost weeks, but it's more months. In the past, every news, no matter if it was good or bad, always interpret in a negative direction, and now it's a bit shifting actually to almost too more positive, almost too supported by tailwind released news. It's almost awkward, but I can say, people think sometimes it's always almost crazy what is going on with the price development, and I know even more experienced and long-term holders of this company saying, oh, now we have the price level, maybe HIMS and HERS is not valued fair anymore. From my perspective, actually it is. It's not cheap anymore, not crazy cheap like it was in the past, but I think it was just all the time too cheap, and now we are in really good balance. And I hope for today HIMS will set really good outlook, really good guideline basically, and reset this valuation into a more positive, into a more undervalued direction. Guys, I'm sharing the results. You can see here, waiting for it, press release and shareholder letter. Should be live at any moment. But before we jump in, just a few information. What I expect personally, or what the forecasts are. You can see earnings per share, $17. I honestly expect $39. Why? I want to see the same beat compared to the forecast from the last quarter. So last quarter was $10 and the beat was $22, and now I want to see the same level of beat. You can see it here. So again, $39 of earnings per share. That is my target personally. And when we talk about revenue for today, you can see the target is roughly the forecast is roughly $469 billion. I want to see a beat by the same difference, so the same scheme basically, what you have seen here, earnings per share. Beat last quarter was $19. I want to see that they make it happen as well. So we're talking about $489 million. And a lot of times they already addressing the forecast for the upcoming quarter. And here actually it might be a quite high target, not sure, depending on you as an individual, what is your perspective on it. But you see, I wanted to see a forecast raise compared to this forecast, so a forecast of Q4 2024 compared to Q1 2025 of roughly $49 million. What is this? Basically, that's double the amount of the forecast raise for Q4 2023 to Q1 2024. You can see it here That's the double amount, 49 compared to 46 for 24.6. So seems simple, but I can tell you a lot of times I work very well with this. People who are backing the stream a lot of times and joining here, loyal viewers, they know what is going on, and we have additional information we will cover today to get a little bit more into the details. I think most important anyway today is really very likely the full year guidance 2025. Currently forecasts are on roughly 2.1 billion US dollars, which is 41% year-on-year growth, and adjusted EBITDA roughly 251 million US dollars, or 12% basically. But let's see what is going on, guys. So one more time, let's check out what is going on with results are live, guys. The results are live. So one more time, earnings per share, from my perspective at least 0.39, but I will calculate it. You will not see it like this. More important, revenue 489 million US dollars would be very, very nice. And the outlook, of course, that will be definitely the X factor defining where the price will head in the after market close, basically. Yeah, let's see, but at least 2.1 billion for full year. That's the target. Okay, guys, don't waste any time. It's getting serious. Give me one more sip of my water. Lawn Mover Ma'am already mentioned 13% aftermarket, so let's see what happened. I mean, there's a lot of energy on the stock, but I don't want to be affected by this right now and just go through my call and make sure I basically back it as accurate as possible. So we can here see 481 is for sure a beat, but as I mentioned, I wanted to see 489. So that's actually not that crazy beat or whatsoever, and actually it's missing my personal target. Earnings per share we will check out, and I quickly want to jump to the outlook. If we can find it. Oh wait, I think I'm too far down. Profitability goals. Oh, but I mean, of course, it's strongly GLP-1 driven, but the Q1 target at least looks very, very strong from my perspective, and full year as well. So yes, maybe the revenue for this quarter on the first glance is not in perfect shape. Yeah, kind of a miss from some perspective, at least from mine. But on the other hand, more important again for me is the outlook, and revenue looks very strong on both. Definitely on both. I mean, that's roughly 55 to 60% year-on-year growth. Yeah, but however, guys, we start to directly figuring out what is going on with the details, and so we add the revenue into our sheet as always and don't waste any time. So let's go back. And you can see here 489 again was the target. 481 is now the result. Yeah, you can see in terms of comparing it to the forecast, it's for sure a beat, but the difference actually, you can see it's not the strongest beat. Yeah, not the strongest beat compared as well to Q3 2024. Hard to tell what I think about it, but let me add quickly as well the one more time the outlook by the company. So here we are. A lot of text, always interesting to read through it. Actually, always some interesting news. Here we got it. I mean, midpoint is 530 million for Q1, and that actually looks way better. You can see I already target for a high number, and it's actually kind of a beat in this perspective. And yes, of course, GLP-1 is a driver, and people out there will think, okay, yes, in the ongoing quarter Q1, GLP-1 will have an effect, a huge impact on the revenue, and then afterwards it gets cancelled. And I can imagine that they're not waiting it that too much. But again, as I mentioned, for me, the forecast, the outlook is more important than the actual revenue results. I mean, those are satisfying actually, but I would rate them as negative, red color, because for me personally it's a miss, as I mentioned. But on the other hand, forecast for me is a beat, and I think it's really a strong target. And I mean, HIMS and HERS is more popular for a little bit more sandbagging in terms of the outlook, and then adjusting it later on, or just producing beats and adjusting it later on even, yeah. So that's for me for sure green. And so overall, I mean, I have negative and I have positive, and I color it overall on neutral, but with a green tendency, with a positive tendency. Why? Because of, as I mentioned, the forecast is more important for me than the actual target, and even the actual target is not that bad, but even I rate negative, yeah. But that's of course depending. Okay, let's check out what is going with the earnings per share. I think that's the next what we should cover. So we have here net income of 26 million. Okay, let me check if that's in the financial results as well. Not that I do any. Yeah, okay, it's 26 million. So we enter it here on the floor. Maybe US dollars. Perfect. And let's go back and see what is going on with the share count. Which number? The diluted one, I assume. So we take it. Very simple. We got it here. 240. 240.75. So I entered it, sorry. Okay, not sure if that's correctly, but my calculation shows me, as you can see here, $11, 0.11 US dollars, or 11 US dollar cents. So that seems very, very low actually, guys. And I can imagine that the drop, yeah, it's the truth. I checked it at investing.com, as you can see here. So the earnings per share is very, very bad. Really, really bad. Again, you can see it here, and compare it to my target of 39 US dollar cents. Yeah. So not sure what is the reason of it. Yeah. I think it's very important to back the live call, and then we are a little bit more knowledge about it. But of course, that's deep, deep negative. Not just because it was a miss, not just because it was not a small beat, because I think, look, after those results, the quarter before and a lot of green before, people, investors, analysts expected a very, very strong beat. A very, very strong beat, yeah. So, however, let's see what will be the other details, but that for sure, I mean, there are no questions left. I will color this because of the really bad result. Again, it always depends what is the background of it, but just the number, and we can for now just judge the number, that's for sure negative. Actually, for me as well, surprising. At the beginning, I held a strong speech with all the Dow history very confidently, and now my confidence is leaving the room. No, that's not the case. But yeah, I would definitely expect something different. And yes, this earnings per share results looks crazy actually from my perspective, at least on the first glance. However, guys, let's go on and take a look at the other details. And we already covered revenue, as you can see here. Now we want to see what is going on with the marketing spend. And actually, where was the money lost? We need to find the money. Let's see if we can find why the margin is not that strong, basically. Marketing. Here we got it. Okay. 221. Oh, that's, wait. Seems like a lot of marketing expenses. 21. 5. 21, 0. Okay, looks good. I entered it, and I need to enter as well next to it the subscribers. That's obviously important as well. Subscriber count 2.2 million. Is it straight 2. But guys, I love it. Part of it. I mean, it's the classic HIMS and HER story, and I like they are a company who are investing and utilizing the money, utilizing the momentum, and I can imagine that there is some purpose behind it, basically. But you can see here 2.2 million, and already now we can cover the first KPIs, as you can see. And let's start with the subscriber count, 2.2 million. I mean, you can see, guys, and don't forget that it's not the Super Bowl quarter or whatsoever. All of this has no impact now. The Super Bowl quarter likely will not even have a strong impact on Q1, more on Q2 2025. Yeah, so you need to keep in mind this kind of delay. Yeah, we're still talking about Q4, the fourth quarter, the basically winter season or whatever, however you want to call it, of 2024. Yeah, but still you can see, I mean, when we compare, and I always do it the same, I compare always the past quarter year-on-year growth to the now quarter year-on-year growth, and you can see Q3 2024 year-on-year growth. So compared to Q3 2023, it was 44% roughly, and now it's 43%. Yeah, so still raising on a very, very strong, very, very high scale. And would I like to see that it's increasing? Yes, I would like to see it, but honestly, guys, I mean, it's on absolute scale. Well, let's see what happened the quarter before. Wait. So that. One, 864. It's roughly okay. And now, I mean, that's not the right approach, but I'm just interested in it. What is going on? Okay, it's a bit less growth. Okay. I mean, look, guys, I talked about giving it still, in terms of subscription, a positive rating, because I think the year-on-year growth is still very, very high, and with 43% compared to 44% a quarter ago. I mean, if they lose every quarter 1%, it's decreased by 1%, the growth is crazy, guys. Yeah, just keep that in mind. And I think, but actually, guys, it's less than before, and yeah, the quarter, I think it's neutral. Hopefully I'm not too positive about it, too optimistic, but I think I'm quite strict, and 43% is very, very solid, guys. It's very, very solid. It was a regular quarter. Again, no special awkward stuff going on. and so I think that's fine. Again, maybe you would like to see more GLP-1 movement. Maybe even negative rating would be more appropriate, but let's go on, and maybe later on I put this in good relation, but I think it's neutral to negative actually. Now we go to revenue per subscriber, and you can see here, and I mean that's a sign for basically, I mean that's a sign for marketing flywheel and really achieving a higher target of customers. And that is more like revenue per subscriber is more cross-selling, upselling. So selling more products to the same customer in the quarter, or selling more of the same product to the same customer. And we can see, I mean, Q3 2024, it was year-on-year growth 23%. Now it's 37%. So that's a very easy one. That's definitely a positive one. And honestly, on the other hand, it's not that surprising, because you need to keep in mind that they likely sell more and more, for instance, GLP-1 products, and they are just on average more highly priced than ED products. I mean, depending on your consume level, of course, yeah, or hair loss products compared to hair loss products, weight loss to hair loss products, for instance, yeah. So that's just a regular development, but on the other hand, a very good one. I mean, they crossed very strongly the $200 mark. And marketing per revenue, again, big doubts here about that. HIMS Nurse is just a marketing company basically, and buying revenue. And you can see past quarter, year on year, they decreased it. So it was the opposite of growth actually. It was decreased by roughly 6%. Now it's minus 5%. So it looks good. It's still heading into the right direction, but you can see when you compare last quarter to this quarter, to Q4 quarter, it increased a bit. It increased a bit even compared to Q2 2024. Yes, it's way less when you compare the numbers to 2023. Yeah, but it's slightly increased, and it always depends. I mean, you can see marketing as well. I mean, it's obviously not investment, honestly, but you can see it as kind of an investment into the future, yeah. And if they want to heat up the oven, basically, and create more reputation, more brand awareness, and awareness of specific solutions, product types, for instance, it's just a useful tool. So even though it increased slightly, it decreased year over year by 5%, but increased from last quarter to this quarter. That's a difficult one. But for me, I want to see it's decreasing actually. I want to see it's decreasing, and I mean, at subscriber, I give it a neutral rating. Even I had more the tendency to go to a negative one. Now I had more the feeling for a neutral rating, but I tend this time, or between neutral and negative, and this time I add and judge or leave a negative rating. I think that's fair. Let's see what is going on with personalized solution. I expect this will increase because of all of the weight loss products. So it was at 50%. Let's see if we can find it. And I already can see they add a lot of very interesting details. Look, they're getting more and more accurate about really names like Roman here. But it's something we need to see if we can cover it together. Is there any personalization? Is there not any rate? Or share how much? Personalization. More than... Okay, yes. Here it is. Ooh, that was difficult. More than 55% of our subscribers were opting for personalized treatments, and our belief is that number will continue to grow. So actually that's a positive development, Again, not that heavily surprising, not the most crucial number for me, but we should not forget this kind of personalization is at least based on the statements of HIMS and HERS. That's kind of a mode as well. That's a USP. You can't personalize solutions. You can't just go to the average local pharmacy or to a competitor of HIMS and HERS, a digital competitor, and ask for the same personalized products. That's difficult to receive through this approach. And so personalized solution share should not get underestimated. And you see it's developing, and of course, I mean, there is kind of a ceiling existing, and you can see year-on-year growth past quarter 30%, this quarter 25%, so it's decreasing as well. But again, it's already on 55%, and they will not stop, I assume. So for me, that's actually a positive one. Yeah, that's a positive one, and it's still heading into the right direction. And I'm quite satisfied with it, I think. Yeah, but maybe let's turn it into neutral. Let's turn it into neutral because the jump before was 10%, now only 5%. 5% is honestly not that bad, especially because we're talking about a high level. But it's okay. It's neutral. I mean, we would expect that somehow personalization the demand is increasing. Yeah. So now let's go to the costs. I'm very interested what is going on here. Might be a reason why net income or earnings per share is quite low. And we just start with general and administrative. Let's see. Hi Tom Wenk. Yes, ich bin Deutsch. Grüße gehen raus. Aber jetzt gerade aus Österreich eigentlich. Weil ich wie gesagt auf Dienstreise bin. Aber ich hoffe, es ist erträglich, was du hier siehst. Und auch im Hinblick auf die Kursentwicklung. Okay, let's go back to English. And let's check what is going on the expenditure side. So where we can find it. Just a matter of time. No. Okay. We got it. General administrative. So Q4. I mean, I quickly copy all of the numbers. So 10% G&A, 5% technology, like for instance MedMatch, the AI solution. Operations and support is 12%. Marketing is 13%. Oh, wait. No. That's not correct. Marketing is 13%. That would be a bit low. Just talked about it a moment ago. And actually, it doesn't look that bad. We can go back. I shared to you and I copied all of the numbers. You can see them here. And guys, it's quite stable, yeah. Again, when you compare it year-on-year growth or development, past quarter deducted by 14%, now by 10%. So the development is shifting a little bit more into a slowdown, and we would love to see that, of course, the expenses getting stronger, lower, but at least you can see, I mean, you can see that the operative expenses based on the revenue is on the same scale like the quarter before. And again, I mean, HIMS and HERS is living in a competitive development, is still starting up the engine, creating reputation, developing pipelines, purchasing stuff, investing, all of this, yeah, hiring people, doing promotion, all of this costs money, obviously. And yes, I would love to see it's getting more negative, especially when you compare the jump Q2 to Q3. You can see minus 5%, very, very strong one. Yeah, look, before it was as well more or less stable. Then it dropped slightly, and now it decreased. I think the market don't want to see it. I mean, me kind of either. I mean, let's get into the details. I mean, general administrative looks positive. Technology development, let's say we want to see that it lowered as well. I know, again, it's an investment. Let's say in technology, it's really investment. At least I rate it as an investment. So I give it a neutral rating in this regard, even though it's not getting lower compared to past quarter. The operations and support. Let's check out what is going on here. 12%. High. Okay, let's rate this negative. Because that's for me not investment, and I really want to see it's getting lower. Yeah, in marketing, I mean, we already judged a bit about it when we compared revenue per subscriber, but here's just the absolute number, and you can see again it's increasing. And I mean, here I rated it negative, and of course I need to rate it here as well negative. And you can see, I mean, we have some red and some green. So let's say in the mid it's yellow, and then we have yellow, and red. Wow. It's again. And I can tell you, HIMS and HERS received the best verdicts from my perspective of all the stocks I'm a shareholder of, and I like and appreciate all my stocks, and I'm very strict with the rating as well with HIMS and HERS. And however, it received a lot of times positive or neutral ratings, but this time it might be an exception, honestly, guys. Yeah. So overall, the level of expenses I rated. Come on, let's be very strict. I rated negative with a tendency to neutral. Actually, at least it's not increasing, but I assume the market and I as well would love to see that's decreasing. Yeah. The same with here with the marketing of revenue. That's actually not the case, so I rated negative. Okay, let's go, guys, and let's see what is going on with the gross margin. Very likely you can see it already here in the past quarter comparison. It actually decreased, or it decreased actually since Q4 2023 as well, likely because of the weight loss stuff. But let's see what is going on with the gross margin, and we go back. Heading to the gross margin. Oh, wait. I think it's as well in the same, listed as well as financials. New customer online revenue, net income margin, adjusted EBITDA, cash flow, gross margin. Where are you? The gross margin was 600 basis points year over year to 77%. Okay. I'm not sure if is it somewhere here? Online gross profits. Not sure if they try to hide it a bit, because in the past, guys, honestly, they displayed it with a chart, with a nice chart, and with the development, and not now anymore. I can imagine why. Because it's getting lower and lower. So this time 77%, as you can see. Again, not that surprising, because I think it comes in hand with the higher sales of weight loss products. And you can see already past quarter it decreased by 4%. Now it decreased actually heavier, by 50% heavier, by 6%. And so I have no other choice than rating it negatively. Let's see what is going on with the free cash flow, which you can utilize, for instance, for buyback programs. Yeah. And hope for the best. Oh man, that's not the nicest HIMS and HERS experience. But it's part of the game, guys. It's part of the game. Free cash flow, we got it here. So talking about Q4, operating cash flow, free cash flow, 60 million. Let's enter it. And yes, you can see here, free cash flow margin. Let me check quickly if that's. Unfortunately, it's the truth. It's the truth. Look, we can't change it. We can't change it. You can see. I mean, there is obviously kind of a seasonality, because you can see as well Q3. Look, Q2 2023 to Q3, it increased and then it dropped to Q4, and you can see the same here as well. Q2 to Q3 increased and then dropped to Q4, and actually it dropped not that heavily when you compare it to 1 year ago. You can see as well the free cash flow margin dropped by 50% 1 year ago, and here not by 50%, for sure not. And yes, we're talking about, in terms of free cash flow margin as well, a positive development, but lower than past quarter. And I mean, yes, I mean, the huge expectations might be a parameter in this. And I mean, that is what we need to consider everywhere here. The expectations have been very, very high by the market, especially by new investors, which with kind of a FOMO effect invested in it and hope for joining the train and the rocket till moon, whatever, and more speculated on the short term. Again, I told you I'm more on the mid or even long term invested, especially on this stock here as well. And so I didn't sell my shares in the past, and even not now. Yes, you would see more free cash flow. Would like to see more free cash flow. But on the other hand, it's the by far second strongest quarter, and it's still a quite strong free cash flow margin, weaker than Q2, but and Q3, but way stronger than the quarters before. Yeah, I mean, the free cash flow itself, again, look, year-on-year development even stronger than the past quarter. So even though it looks slower than before, I think that's actually positive, yeah. But the free cash flow margin itself, not that strong than the quarter before, not that strong than the quarter before, and comparing it. Year-on-year growth past quarter, year-on-year growth this quarter, definitely lower with 8% compared to 11%. And so actually here I mean, it's crazy good compared to 1 year ago. It's no question, but that is likely not the benchmark. And it's still very solid. 60 million free cash flow. Free cash flow, some people tell that speaks the truth, this kind of KPI. Yeah? So we should not underrate it. I think it's not that bad, actually, guys. I think it's not that bad. And you can see it here as well, this kind of rhythm, yeah? I mean, you can see Q2, 4.8, then it goes up, and then Q4 is lower than Q2, yeah? Q4 is lower than Q2. And you can see a bit this rhythm here as well. Up, down, and this is lower than this, but stronger than actually. Ah, come on. I don't want to talk around it. I rate it negative. Need to be strict here. I always keep it like this. If I pending a bit between a neutral, between two directions, I tend to give it the more negative rating. In this term, I rate free cash flow margin as well negative. Even though free cash flow itself, the absolute number, looks quite compelling from my perspective. Now let's see what is going on with the shareholder value and the stock-based compensation share of revenue, basically. How much money they wait. Stock. they granted basically to their staff stock-based compensations. Oh, wait, here was it. Total stock-based compensation here. Okay, we got it. Sorry. It's sometimes a little bit difficult to concentrate, to focus. 24 million roughly. So I add this. 24,349,000. And that looks actually quite well from my perspective. I mean, you know that some management's getting greedy in certain situations, let's say it like this, but we can see it here. We're just talking about 5.1% stock-based compensation share of revenue, and it's more than 1% less than the quarter before, and you can see it more or less decreasing over time. It decreased already past quarter compared to year over year, and now even more heavy. And this again compared to the free cash flow, that is very simple to rate for me, and that's a straight neutral for me. I can see that I mean, again, company getting more profitable, and of course they can utilize this money to pay, for instance, the staff. Yeah, to pay the staff. Okay, let's take a look at the full year guidance. We can see already a mixed picture, but definitely not a positive one. I assume really, I mean, so far, yes, there are other details which are not looking that well, and you would love to see more positive surprise. But again, so far, I think really the big negative one is the earnings per share. However, I can live with it as far as the management can explain what is the background of it. More important for me again is really on the revenue side. I mean, I'm invested in HIMS and HERS. For me, it's a revenue growth story and not a profit growth story right now. I'm invested because of the revenue growth, because of getting a more stable position in the market, yeah, and increasing the cake, basically the market share, winning competition against other vendors of this kind of services and solutions and products. And so when you check out the revenue forecast and as well the revenue results, but revenue forecast very strong, and the revenue result of Q4 is solid. It's okay, not that strong, but it's okay. It looks for me good. I can tell you, just my opinion about it. Would it be in the opposite way? Yeah? Would be the earnings per share good and the forecast, the revenue forecast bad? I can imagine it would be even more negative. Yeah, maybe there are other aspects I'm not considering right now. I do this here live, and sometimes you have your limitations, but nothing too negative. I mean, yes, earnings per share miss is not good at all, but it's not like killing at least my investment thesis. Let's see what is going on with the outlook, and we already took a look at it a moment ago, and I was positively surprised. And again, I mean, I'm more about the outlook. I'm more about the forecast. I'm more about the future than the current, about the present. Basically, the present is the right word. And you can see here, Q1 we checked it already, but full year 2025. And again, keep in mind they adjusted 2024 revenue a few times. Yeah, and I assume this already considers the FDA GLP-1 drop of Friday. Yeah, so I assume it's deducted and by GLP-1 products which not getting sold from Q3 on, very likely Q3 this year on, and still it's 2.35 billion, which I will add right now to the table, and you can see it's way more than what I have seen as forecasts by the analysts before. 5 Hey, that's not the right, zero is missing. Okay, that looks good. I mean, look guys, they're guiding 59% year-over-year growth. 59%. Before it was 41 or something. Look, 42%. Yeah, what is going on, guys? What is going on? That is, for me, straight green with weight loss or not. And again, guys, I mean, those of you who knows it, guys. Yeah, I mean, this company is more than weight loss, and weight loss, I think, is just kind of a booster for reaching their long-term targets. They can be happy to had this kind of chance, this opportunity to utilize this weight loss booster, this GLP-1 weight loss booster, yeah. And still, keep in mind, they can sell classic weight loss products by Eli Lilly or by Novo Nordisk, and they can sell their own weight loss products by pills, you know, this personalized kits, kit 1, 2, 3, whatever, how they called, yeah. You can check it out by yourself, consisting out of different colorful pills, you know, I'm not into it, but all of this is existing still. But again, who's investing into HIMS just for weight loss? Straight from my perspective, honestly, guys, just my opinion, yeah. I need to make sure that you understand this aspect, yeah. But just based on my opinion, that's not the reason why you should be invested in HIMS and HERS, at least on the mid and long term, yeah. Really not. It's about the principle, this kind of innovation, the setup of management, crazy management, yeah, crazy network, crazy fundament. Now they're investing, they really putting the rails in front of them to make sure the drain is reaching the target. That is what I can see. And yes, maybe now they missed some earnings per share target. Yeah, from my perspective, who cares? Who cares? Yeah, actually some cares. And maybe there are other stuff what I'm not considering right now. But again, I love to see the outlook, and I love to see it more in this direction. Future looks good. The present looks a little bit more difficult, whatever the reason is, than in the opposite direction again. And for me, this looks good. That is straight fire for me. Yeah. And now let's see what is going on the adjusted EBITDA base. 270. 12 till 13%. Yeah, that's obviously way more than I calculate, because I can calculate it with 12%. I want to make sure that they reach the 12% adjusted EBITDA margin, what they have already reached past quarter. I mean, they have a mid or long-term target of 20 till 30%. Yeah, adjusted EBITDA margin, and still at 12 till 13%. So there's still a lot of room for improvement based on their own targets. And they are still in a very early stage of their master plan, yeah? At least I expect that's the case. And so 12 till 13% adjusted EBITDA margin is great. A lot of companies with this kind of growth, with this kind of moves and reputation already achieved right now. And yes, I know this reputation is not just positive. Yeah, I know some analysts, some people out there think, oh, it's just a meme or whatsoever. But again, compare it to some other whatever software companies as well, with some SaaS payment plans, software as a service payment plans. A lot of them don't make any money, and they're just losing even after years. They make it happen. Yeah. That's my 2 cents about this. But again, do your own judgment. So mid is 295 and 12.5% adjusted EBITDA margin. Okay. You can see that 282 is already, because I calculated it based on the revenue, so it's already kind of updated. So this is how it looks. And this as well, I would love that they state more adjusted EBITDA margin, and who knows, maybe they will surprise. But with this, I'm happy, but it's not pushing me into positive vibes like the revenue forecast, the revenue outlook or the guidance. And so I rate this as neutral. However, I could rate it as well positive, because again, the absolute number, I mean, the absolute number is good. Look, this would be more appropriate actually, because the absolute number is obviously very good. The adjusted EBITDA margin is not crazy great in my perspective. However, full year guidance looks positive for me, and that makes me happy, honestly, guys, because again, we left already a lot of red behind us, and I know why we did this. So however, doesn't look that bad, honestly. I mean, the start was so bad from my perspective. Earnings per share, and at least earnings per share was really bad, guys. Again, when we take a look here, I mean, let's give it a final verdict, and then we can go very quickly through the shareholder letter, and then we can quickly check what is going on with the price. We can check out what is going on with the comment section, and I quickly check out what are the reactions of the market on Seek and Alpha. We can check this out together as well. I will accelerate a little bit right now. So again, earnings per share, I mean, bottom line growth, negative, no question about it, very negative, honestly, guys. Top line growth, revenue growth, neutral or even positive because of the great, from my perspective, Q1 forecast, but I rated it neutral. We have here, when we take a look at the marketing flywheel, so subscriber count and marketing of revenue, more neutral, negative perspective. On the other hand, we see some upselling, cross-selling, very likely because of the weight loss products. However, more revenue per subscriber, that's the truth. And personal solution share is developing as well in the right direction. So overall, this one is neutral for me. Yeah? We have operating expenses. I don't need to focus here the details. I already granted for the overall section a negative rating, so neutral and negative. Gross margin negative, free cash flow neutral. So overall, and stock-based compensation positive. So that is what I didn't want to do. So overall, this here is more like on a neutral level. Yeah, quite neutral. I mean, operating expensive has more relevance for me than stock-based compensation, for instance. Yeah, I would love that the operating expenses are improving, and whatever, stock-based compensation can increase again. I would not worry that much about it. Yeah, but again, it's green. So, however, all of this is a little bit more neutral with a negative tendency. When I rate this, all of this neutral, negative tendency, basically the same like top and bottom line growth, neutral, negative tendency. Yeah, or let's say, yeah, okay. I think you know what I mean. Yeah, that's something between negative and neutral. And now we have the guidance, and again, I told you that, and that's the reason why I write here status Q4 2024, because let's see if they will adjust it, and hopefully they will update it and improve it and increase it through the business year, the already ongoing business year 2025. However, full year guidance looks very good on the revenue side and mixed on the profit side, from my perspective at least. However, it's for me positive for sure, especially because I'm invested into a growth story. And I mean, those top here, and especially full year guidance, is for me very important here, and details are as well important, no doubt about it, but full year guidance has kind of a weight in it. Yeah, and again, you know, this one here, all of this was negative to neutral, and the full year guidance positive. And overall, I give it, primarily because of the full year guidance, but again, some details doesn't look bad. Not all of them look bad, let's say it like this. And revenue for this quarter as well, from my perspective, not looking that bad. Overall, I rated neutral rating. That's my verdict, guys. That's my verdict when I talk about this company for now. And let's go on quickly through the rest of the documentation. I don't want to screen it in details. Actually, I need to work tomorrow quite early, so look, bed is already ready for me. So I just want to cover rough information. Yeah, you can see a share of observed total customers, and you see here the competitors. Yeah, I think all of them. Roman Health is, I think, the only. Wait, I'll make it a little larger for you guys. Let me check if you can see it well. I think Roman is a private health company, and the other ones are public traded ones, as far as I know. However, you can see really that, I mean, okay, it's very hard to go of this different 50 shades of gray, you know, to understand those shades of gray. But you can see that Roman actually is developing very strongly, but not on the level of HIMS and HERS, for sure not. So, I mean, if you want to sum it up here on the first glance, everyone everyone but Roman Health, if I interpret it correctly, is losing market share, and Roman is participating on it and collecting this market share, but even more HIMS and HERS. You can see 50% of the market. So far so good, very good actually, guys. Love to see it. Again, not the development of 2022 to 2023, and you can see that Roman dropped here and now increased. So I assume Roman is really doing some things right. Yeah, it's doing some things right, and I assume they're riding very heavily as well the weight loss wave, and that might be the primary reason for this effect, this development. However, just focusing, HIMS and HERS looking great, and I hope that somehow HIMS and HERS can defend themselves very well to Roman, but I'm quite confident, especially when it's not that simple or that easy anymore to sell compounded GLP-1 products based on semaglutide or other ingredients, because then I assume that HIMS and HERS is way more developed, has a better platform and better overall portfolio, better overall AI, better overall management. At least that's my opinion. Shares of observed total sales, that looks even stronger. So customer-wise, so sales-wise, okay, sales-wise it makes even more room, HIMS and HERS. Yeah, okay, but however, same story more or less. Same story or more or less. I will just focus now the charts, guys, because I think that is the stuff what HIMS and HERS wants to make us see and screen, and that's the reason why I'm doing it now. Attention, whatever, what is going here? What kind of attention? To expand into new specialties, okay. Yeah, okay, it seems like it's working. The weight loss products are working. That's great to see. Okay, what we got here. Annual cost of GLP-1 weight loss subscription plan, inclusive of member costs and other fees. HIMS and HERS. Yeah, basically HIMS and HERS states that they are cheaper than everyone else, especially compared to Roman, what we talked a moment ago. So there you have it. I mean, okay, that's a bit awkward, because then you would think, okay, I don't want to go to deep into the ratio between subscribers and sales, and why it's a bit awkward for me that they offer it way higher for higher prices, and still the sales are less good compared to HIMS and HERS of Roman than the subscribers, but another story, not that important right now. But so far it looks good. So far it looks good. Again, so much focus on weight loss. It's crazy. MedMatch, easy access. Yeah, this new lab diagnostic capabilities. Let's see how it runs out. Basically, they acquired the company this week ago. They acquired 2 companies actually this week, but just one is about the diagnostic capabilities, and let's see what this will be. I mean, that might be as well a strong USP differentiator to the competitors, differentiator as well on, I mean, they have this personalization, this match AI, and of course a huge database, but personalization on this income level, on the sales level, and on the product level, a bit the piece of puzzle as well is of course this lab capabilities, which they hopefully now will establish successfully, and that's as well kind of personalization. Personalization already starts, of course, with the analysis, with the customization, with the basically information you really get out from a customer, and of course blood data is a huge aspect as well, and that's a fundament for a lot of further treatments in the future, like testosterone, menopause, this kind of stuff. Okay, we got what we got here, all-based solutions. Talked about it. That's when I mentioned these kits and these pills and tablets. Semaglutide, okay, you can see it here from May. Personalized semaglutide, and I mean, maybe there's still hope that they can go on with providing personalized semaglutide dosing, and maybe find this gray zone in the regulation of the FDA. Let's see. But you can see already liraglutide, gray on white in this case, or black on white, however you want to state it or see it, coming 2025. So I assume, I mean, I hope that there will be no gap between running out, between removing the semaglutide dosing out of their product portfolio and stopping selling them. I hope immediately they will go on and keep on track and selling GLP-1 by the liraglutide versions. Again, liraglutide is not that efficient. I think you need to, at least as far as I know, not use it as a patient each week, but each day. But if they provide it cheap, yeah, might be still a banger. Guys. Not underestimate. And again, it's only weight loss. Yeah, talking about some capabilities and capacities and resources, what they stated. Yeah, we see here as well the long-term adjusted EBITDA margin. Again, 12 to 13% is the target for the 2025 business year. Gross margins in the mid-70s. Currently they are at 77%, so don't be surprised if it's getting lowered. Subscriber revenue, we covered it already from my perspective. We can see here, I mean, that's kind of an indicator for retention. And what we can see here is that the chunk of, I mean, it's of course as well, is it the case? Yeah, it's not the case actually. You can see in the past, repeat customer bar, this pillar here increased more heavy basically, yeah. But then basically the new customers increased that heavily in the past quarters that it's a bit difficult to keep on track and keep this more or less, you can see here, 50-50 balance of repeat customers and new customers, because you want to see kind of a retention rate. You want to see that they can achieve loyalty on the side of customers and satisfaction, and so customers are sticky and stay on the subscription plan basically. And not sure if that's negative, because again there are a lot of new customers included. Let's see what will go on in 2025. But I hope, I mean, most important at the end, yeah, is not actually, for me, it's not the ratio between new customers and repeat customers. For me, it's to see that the number, just this light, what is this, light purple bar here, that is light purple repeat customer bar. I hope it's purple, I'm not sure actually. But it's getting larger and larger, and it's getting crazy larger. Yeah, look here. I mean, here more or less 100% up. Here more or less 100% up. Here more 100% up. Here a bit less than 100% up. Here again way less than 100% up. Yeah, like look at the difference. Maybe it's 30%, something like this. 35% I can imagine. So a third overall. but for sure it is sticky, and for sure the loyal customer base is growing. Yeah? There is, I think, no doubt about it when you take a look at those. Online gross profit, yeah. Fuck, man. Look, guys, I mean, still, if I would just see those numbers, ignoring the price chart, and yes, it's a hell of a ride, I know it, yeah, and not everyone is mentally 100% stable, and I understand that some of you, if the price is still that down, and very likely it is, they are in bad emotions, and let's see how I sleep today. Still, I'm smiling for you guys, but let's see how will run out later on. But still, when somebody would tell me that this kind of numbers would exist in the HIMS and HERS investment 1 year ago, 1.5 years ago, 2 years ago, I would think, crazy, you are crazy. And yeah, it looks still very, very strong. And again, oh look, this is what we will read now. This we read together quickly. I hope we get some relevant information out of it, because I want to see what happened here. That's this earnings per share or net income, as you can see, and yes, it's no loss, but you can see the gap net income margin was 19% past quarter, and now 5%. Let's read this here all together. As a result of these trends, we generated GAAP net income of 26 million in the fourth quarter, improving significantly from net income of 1 million in the prior year period. For the full year, we generated net income of 126 million, which was impacted by the change in valuation allowance of 68 million due to the full release of the valuation allowance on our domestic deferred tax assets. The benefit from the change valuation allowance was offset by current period tax activity. The benefit from the change in valuation allowance was partially offset by current period tax. Okay, so it sounds like kind of one-time effect. If an approach to it. Yeah, okay, that's difficult for me to judge, but it sounds like it was a one-time effect. I'm not sure this quarter or the quarter before. I assume I hope it's this quarter, so it was negatively impacted by one-time effect, but I assume it was the Q3 2024 results. So maybe they would be regularly lower. But still they missed the guidance. Not really smarter than before I read this part, but it is how it is. Okay, it is how it is. Cash flow looks for me quite well. Yes, not that strong, but we talked about this cash flow dynamic. And you can see here cash flow and investments, it's heading into the right directions, and yeah, this was this rhythm we have seen. However, you can see this development strong. From my perspective, strong. I'm very curious to figure out. I mean, I will always update on Instagram and on here in the community section at my account my portfolio each month. At the beginning, I will show you some insights. What is the depot volume, for instance, the portfolio volume, how high are the different shares and all this kind of stuff, and how I evaluate it. And I can still imagine that actually, especially when the price dropped right now, that it's very strong undervalued for me right now, HIMS and HERS. Might be the case, but I need to calculate it later on, likely on the at the weekend, guys, or when the month is closed. So I think we covered it right now. Now together we will check quickly what is going on with the stock price. I mean, there is no need to guess from my perspective, but you can see, yeah, it dropped heavily. can see it here, 17%. 17%, almost 17.5% after hours. Yeah. That's the lifestyle as a HIMS and HERS investor, I would say. Not the first time that results not have been received by the analysts and by the investors positively. But again, I rated neutral. Not that great than past quarters, but not very, very weak at all. And again, guidance looks good. So yeah, it is how it is. Okay, guys, let's check out what is going on Seeking Alpha, platform for analyzers, for information parameters, and as well, which has a community for stocks. And we can see here, that is the news which was released roughly an hour ago about the results. And we have 31 comments. So let's find through the comments very quickly. I love to work with this kind of comments because it gives insights about what is the opinion of the market about different stocks. I like this very much. Guidance was better than expected. It's all about the GLP-1 story running out and how it much of a whole it leaves in the revenue growth. I think the numbers are surprisingly strong though. Yeah, sharing this, guys. Dumping hard. Okay, tell me something new. Wow, terrible guidance. What? I can't see it. Honestly, earnings per share okay on whatever, but terrible guidance? Not sure about 59% year-on-year growth and terrible guidance. Hey, look, they're basically defending as well, HIMS and HERS. And you can see here in the brackets, people are liking this post, but 12 this one, 11 this one. So the more HIMS and HERS optimistic one. I mean, yes, some short sellers are making good money right now, but I'm not the type of person who can act on a daily basis in terms of HIMS and HERS or of the stocks I'm a shareholder of. I don't want to time that strongly the market, and so I stick to the positions as far as as long as I'm convinced, and my conviction didn't received any hit by these results. That's my personal opinion, guys. Okay, let's go on. By fair price of the stock is 0. Okay. Yeah, look, each their own opinion. If guy incognito means 0 and 4 people like it, yeah, it's okay. Amazing what happens when you can no longer make money off stealing others' pharmaceuticals. Yeah, it sounds like people who are invested in Novo Nordisk and Eli Lilly, and actually I can relate even to those folks, and maybe it's even the truth. I don't want to judge about it, but again, it's not just GLP-1. Yeah, and you can see it here. People who bought this based on GLP-1. Yeah, that's exactly it. That's exactly it what I'm stating. Yeah, it's not just GLP-1. It's way more this kind of story. Okay, but yeah. The MMMs are just, market makers are just shaking the weak hands out with GLP-1 news after the huge run-up, 2.4 billion revenue and growing 6% of this year, and it's priced at below 10 billion for the drop. This is nothing like an ARM, Snow, Palantir or Tesla. I'm holding and adding more here after the drop. The run-up was frothy, but it's now back down to earth. Yeah, no, even for me not, guys. Honestly, I never thought it's now completely overvalued, even for $70 US. Just my personal opinion, that was not the case. And again, I think, and I told you, when you compare it to some SaaS companies, for instance, a lot of them just losing money, growing strongly, but losing a lot of money. And he's comparing HIMS and HERS as well, kind to these companies, and you compare it by yourself. Check out the numbers, compare it to other companies, yeah. and yes, it's not a SaaS company, it's not a software company, you can't rate it 1-to-1, but it's executing still very, very well. Look, I mean, what they want to do or what they want to achieve, they achieve it somehow. Yeah, they do this kind of Super Bowl advertisement, very likely to, on the one hand, create awareness for the customers and for reputation of this brand, and being positive, basically recognized by the population, by the citizens of the US. On the other hand, so many analysts and investors getting big eyes and greedy and focused on it. Yeah, that's not the fault of HIMS and HERS. They played it perfectly, and I'm sure they play other things in the future. I'm convinced, I'm at least personally convinced, future stories they will play them as well and execute them very strongly. Post a meme stock. I mean, there's honestly a lot of, you can see here, headed back to $20, total disaster. There is for sure people who are disappointed, and there are people who tell, look, I already mentioned it always, that it's just a meme, a hype or whatsoever. And again, each their own opinion. But on the other hand, here are many people as well who telling, look guys, it's way more than just GLP-1. It's not the bad, it's a very good guidance actually, in sharing the opinion I have, more or less. Yeah, so maybe somewhere in between is the truth. We will figure it out. We will figure it out. Let's see. Might be the case. I'm not sure what is the, let's check out together. What is the short rate currently? 28%. I'm not sure if it's up to date, honestly, guys. But 28%. I think it was already at this level yesterday, Friday and the days before. Okay, but it will be still very high, honestly. It will be still very high. And not even sure if the short traders or the long traders won, because I think still the stock is how much? $42, yeah? Still not cheap, yeah? And still not cheap. I mean, how many people out there mentioned that at the beginning this year they mentioned, oh, full year price target, and they are the optimistic ones. Full year price target would be amazing if we will reach 40 till 50 US dollars, or 40 till 45, or 30 till 35, something like this. And now, yes, it reached 70 US dollars and was crazy, yeah. But it's still, you can see 40 US dollars, more than 40 US dollars. Still, it's just maybe healthy that this price correction happened, and it happened a lot of times in the past. It's regular, it doesn't need to mean for me it's a meme. However, I will quickly go through here in the software, through the comment section, and then we are almost done with today's call, or we are done, honestly. I hope you enjoyed it. So let's see. 800 shares, 80% of portfolios, Dingaros. Yeah. Okay, I mean, I hope you are emotionally stable. For me, I have more shares, but on the other side, it's just 62% of my portfolio. But still, yeah, again, I would love that it would increase and reach to new levels. It is how it is. And I stick to my principles, and I'm very, very fine with it. Believe it or not, and I hope you are fine as well with your investment. Lone Mover Man is mentioning this will crumple tomorrow. Jonathan Anderson is asking, should we sell HIMS? Yeah, I mean, it's not should we. It's always about you as an individual, your own risk tolerance profile, and why you purchased it, and when you purchased it, And do you need the money for something else or whatsoever? Nobody can answer you the question. Again, I will not sell it right now. I'm still satisfied with the results, or yeah, I'm satisfied. It's okay. If it's developing like this, for me, it's fine overall. And it stays a very volatile stock, a very risky stock, connected or coming with a lot of chances as well, of course, a lot of upside as well. But it stays risky. Nobody knows. Look, the FDA bomb is now dropped and imploded, kind of. It might be good because this GLP-1 hype, actually, it was for me not a HIMS hype, it was always a GLP-1 hype. And they survived it from my perspective, as far as I can judge about it. And I think they will make the best out of it. They utilize it, and they still have a lot of different strengths, yeah, and products and this kind of stuff. So again, for me, it's still definitely at least a hold. Yeah, when I do my calculation, maybe it's even a buy. Let's see. Long mover man is mentioning complicated question, depends on a lot of things. I'm in for the long run, so I won't. Yeah, I'm sharing this long mover man. Hi Felix Fetters, nice to see you again. I don't think it is a buying opportunity yet. I want all of the Wall Street bets people to start becoming bearish, then I will add more to my position. What do you think? Again, I think it's a buying opportunity. It's just my opinion, but really, guys, I don't want that anybody comes to me later on tells me, Julian, I lost half of my home because of your words or whatsoever. That's no financial advice, no consultation, guys. It's at the end your own judgment, and for me, I will stick to my position. It's already a very strong one. I do my calculation, and if I figure out or come to the conclusion that it's heavily undervalued, again, even though I'm still have something like $80,000 or something like this invested in it, maybe I purchase another 3,000 euros. Maybe I do it, even if it's just a small chunk, yeah, of whatever, less than 5%, I do it. I did it already when I had, I think, 30,000 euros. I invested 3,000 euros, and I thought, I'm not sure why I'm doing this. Kills my performance at the end, and it's just really a small part of it. But this is how I see it, yeah. And then I have at least I've ramped a new flag into the ground, and I know that I utilized it somehow. So for me, it doesn't count how much at the end. It's part of the game. I think I might have, I think it might have already happened after tomorrow. Double-digit dip tomorrow, I think, but what then? A slow climb until Q1 might be the case. I'm very curious actually about figuring out what Andrew Dudum and his gang, so his colleagues of the management board and of the executive board, what they are stating at the call. I think a lot of times they're performing very well and giving good insights. And I assume they are well prepared since Friday. There were a lot of questions of the FDA ban and the stop of the shortage basically, and of the effects on the upcoming quarters, and what are the plans, and what is going on with the profitability or whatsoever, why they missed earnings per share. I mean, yes, again, my target was likely too high because there was a Q3 one-time effect. Not sure if I forgot it or not, but still it's a miss. So I can only blame myself for it. But yeah, it could be way worse. Yeah, but again, you asked Lone Mover Man, and you deserve an answer. And I think, what do I expect? Yeah, I might expect something like this. Yeah, it really depends. I mean, it really depends on what are the news by HIMS and HERS. I mean, look, if in 1 week liraglutide gets popped up, and so weight loss, GLP-1 weight loss products based on liraglutide, and is it liraglutide? I think so. check. Not that I'm using the wrong wording, but I think it was liraglutide. And if it's popping up in 1 or 2 weeks and it has some, liraglutide, and it has some very special price it comes in hand with, everything is, it can already achieve a kind of a U-turn or something like this, So, and the stock is heading in the opposite direction. It can be tomorrow be a bounce or whatsoever, Not sure how the short sellers will behave and all this kind of stuff. But I honestly can imagine it would be not the first time that even the earnings results are positive. The effect on the price after market is, after hours, is negative, like now. And then in the upcoming weeks and months, it's recovering, and even heading to new highs. And I personally expect that if everything goes well, the stock will be for sure higher now in end of the year than now. After hours price, this $42. That is my opinion. And everything in between doesn't bother me, honestly. EPS was bad, but it was not a total shit show. No, it wasn't. For sure, I don't think it as well. I mean, just checking one more time at investing.com, the earnings per share development, and you can still see, I mean, I'm not sure if, likely it was a one-time effect, this $32. Hopefully I'm not missing it, but look, again, $11 US cents is way more compared to any other result, and it's still heading so nicely into a strong direction. Look, I don't know what happened, why they stated 17 US cents as target and just achieved 2/3 of it, or let's say 60% of it. Not sure what is the reason, but it is how it is. At least a very tiny revenue surprise again here was not the strongest one, but the outlook looks great for the next quarter. Let's see, guys. Stefan Ackermann bought the dip, and Felix Vetter mentioned already homeless, don't worry. Because I mentioned before, I assume that you should not, because of me, your home or bet your home on the stock or whatsoever. That's funny, actually. That's good. Look, we can together soon find a bridge and some garbage can where we make a fire and light it up together. So we are at least not alone homeless. Let's see. I think there are a lot of users in the chat, if HIMS is going bankrupt, who are homeless in worst case, But honestly, just joking. I assume everything should be fine and nobody should speculate with that much money on a stock like HIMS. I think that's not really a good approach. Lawn Mover Man is mentioning, I think that the ability to continue to provide GLP-1 is a high priority now. If that gets confirmed, then it might pop again. Get together or HIMS. Lawn Mover Man, you might be right again. Yes, as I mentioned, I see it again. See it the same. What is going on with liraglutide? What is going on with this lab stuff? What is going on? Look, what is the next story and what are the next doubts? We don't know it, but hey, guys, it's such a nice adventure at the end. Look, it's 62% before market close today of my portfolio, or even a bit more because it grew today by 4%. But for me, it's really an adventure. And if I lose all of this money, I will think, Julian, you idiot. And my not born children will think the same, honestly. What could we all do with this money or whatsoever? But look, I have my principles. I follow them. I do it on good purpose. And I enjoy to be invested in this kind of companies. And HIMS & Hers is a really special adventure. makes you feel alive, kind of, even though I have other situations in life where I think as well I'm alive. Look, I'm here as a business trip. It's exciting as well, yeah, in a foreign country, for instance, like Austria, even though it's not that exotic compared to Germany, but sometimes the business trips are more exotic to more foreign countries, yeah, or other continents. However, I like this. That's look, what is the right word? I need to find it. Give me a moment. It's called passion. I searched for the word passion. For me, it's passion. Yeah, it's simply passion. It's more than a hobby. It's passion, and it's investing not in a stock. It's investing in a company, into a management team, trusting them, growing together, experiencing together this kind of stuff. And hopefully you are at the end, it's profitable, you make money out of it. And if not, at least for me, it was a good ride. It was a crazy and good experience. Yeah, community meeting under the bridge. Yes, yes. I will let you know the coordinates. Okay, but again, do your own evaluation. Really important, guys. Really important. Jokes aside, it's at the end, money is sometimes serious. Investing is serious. Not everyone is like me and look is more or less emotional stable and financial stable. And if you lose the money, life is not over. So make sure that you do what you do with good reason and purpose and considering all your circumstances. However, guys, I mean, that's it for today. Let's check last time for today. What is going on with the price? 18% down. 18% down. So even a bit more than a moment ago. Let's see how it is tomorrow. And let's see how it is next quarter, and maybe in 1 year, and maybe in 5 years and 10 years. Really, let's see what the story brings to the table. Just a quick outlook to the last 2 earnings call for this quarter, live earnings calls. I'm backing, and you can see it will be Sentinel-1, very likely at the 12th of March. So cybersecurity basically out of the US. And then I will finalize this earnings season with my newest investment, the 6th stock I'm a shareholder of, and that's gambling.com group. So basically like a booking or Airbnb for accommodations, or if you're from Germany, Check24 if you know it. So a comparison site of different betting vendors and iGaming, so online gaming vendors. A little bit moral-wise, ethic-wise, not that clean, let's say it like this. At the end, it's gambling, but it is how it is. I will back both earnings calls as well, if everything goes good. And guys, as always, if you enjoyed what you have seen, and I love that you have been that active at the chat. I really appreciate this, guys. Big shout out to my loyal followers. I like this very much, guys. That makes a lot of fun and joy, brings me joy during these calls, not sitting alone here on my bed and crying alone because of 18% negative development. I can share this situation with you guys. And if you enjoyed the stream, feel free to leave a like, feel free to subscribe to the channel, subscribe and follow me as well on Instagram and on Twitter, as you can see here. Long November, appreciate. I will stay safe and stay healthy, and I hope you do as well. So again, greetings to Finland. Not get a cold or something like this, but I assume you know how to handle this kind of weather conditions if it's still cold there. However, guys, appreciate all of you guys. One more time, quick disclaimer, this was not financial advice, consultation whatsoever. Do your own due diligence, do your own decisions, especially in terms of HIMS and HERS. And most important, and even way more important than money, of course, is health as well, mental health. I mean, again, that's as well the story of HIMS and HERS, but the story of each of us staying healthy mentally and physically, I think, is a very crucial aspect. And yeah, have good and social environment as well, friends, family, and then it's not that negative to experience this kind of life earnings release, basically. Yeah. Thank you very much for joining, and see you next time. All the best. Cheers. A sense of capital.